The opening call. Today is Tuesday, July the 25th. My name is John Hoagland. As always, thanks for trusting me with your time. We are always focusing on seeking accurate context, which can be difficult. Always reminding ourselves about risk management and remaining patient in our trading. If you are already in the markets this morning, hopefully you've got things going your direction. We are all always hoping for that. Well, what are we looking for today as far as economic numbers? The FOMC meeting begins today at 8 o'clock. We've got the Case-Shiller and FHFA home price indices, 9 o'clock Central. We've got consumer confidence as well as the Richmond Fed Manufacturing Index. So some numbers coming out this morning. Some things may be somewhat impactful, perhaps. Consumer confidence may be somewhat impactful. That's this morning at 8 a.m. during the session here. So maybe we'll get a chance to see if there's any volatility caused by any of this. As far as U.S. stock indices, mostly to the upside. Looks like NASDAQ might be the leader to the upside this morning. The Dow just slipping below settlement. It's down about 12 ticks, and the S&P just about even, up right now about 4 ticks from settlement. So those stock indices did hold higher after support levels held yesterday. Investors are, of course, waiting for confirmation of an assumed 25 basis point rate hike that should be announced tomorrow at 1 p.m. That's already kind of defined as already in the market. If something unusual happens, be aware that that's a big release. Volatility can ensue at any time after that, right? And then we've, of course, got the Fed chair presser where Chairman Powell will be discussing what they talked about. Earnings this morning, Verizon with mixed results, GE, GM, and 3M, all of them beating expectations on earnings per share as well as revenues. A couple of those kind of already being talked about as big movers here this morning as far as the stock indices are concerned. And of course, as we all are aware, we have some major earnings after the close today. We have Microsoft, we have Alphabet, which is Google, and of course, just tailing on the end of that, we have Visa also coming out at the end of the day today. Crude prices have held above an inflection point this morning as China has promised economic support, trying to prop up its lagging economy. And that's kind of an assumption that if they are propping up the economy, there will be more demand for crude oil, more demand for gasoline. And that's kind of why they're saying that the crude prices have really kind of been holding up at a higher level here. It's that 78.20 weekly kickoff high yesterday, pretty close to the overnight low. So at least it's holding for now. Of course, we'll see that here on the charts very shortly. The VIX this morning up slightly at 1402, was 1428 yesterday, 14.02, 14.28 yesterday. So actually a little bit lower than it was yesterday. Dollar index is up to 101.4. It was 101.2 yesterday at this time, and the yield on the 10-year slightly higher, 3.9%. It was 3.8% yesterday. So as always, we ask that you hit the lucky like button, share, comment, question, feedback, heckling, and love are always welcome here on the Market Prep, soon to be the opening call. We're looking forward to having the opportunity to spend more time with you. It looks like we're going to be starting that next week on Tuesday, from what I understand. That's the schedule. We'll see if we can stick to it. Good morning, Pete. First in the room, winning the prize this morning. Duke, good morning. My brother Rick, I love you, buddy. I haven't talked to you in a little while. I'll call you later, see how things are going. Caprice, good morning. Tachyon, Josiah, good morning. Theo, Stephen, George, Lacey is the center of the universe. She's a little bit crazy this morning. I've got some folks working in the yard, taking down some overgrown stuff that I've got going on in the yard here. So you may hear chainsaws, you may hear a barking dog in the background. I'll try and keep that as uninterrupting as possible. Good morning, Robert. Scott Sawney, Concord. Will, good morning, Rooster. Nameless Trader, good morning, Nameless Trader. Futures trading today, good morning, Will. Good morning, Shaw, Jimmy, JD, Alejandro, Jules, Dan Trader, good morning. Sure, Sir He. I don't see that Trade of 8 is down. I haven't seen anything here just yet this morning. My Trade of 8 seems to be running fine. Fire Angel, good morning. HPAC Communications, good morning to you. John, good morning. Nastic, Will, Matthew, good morning. Joe, with his words for this morning. Good morning. It is often the small steps, not the giant leaps, that bring about the most lasting changes or the most lasting change. Queen Elizabeth II, thank you for those thoughts every morning here, Joe. I enjoy hearing and reading them. Good morning, Bill. Good morning, Sarah Hall. Prayers and love to you as always. Well, we got a lot of folks saying good morning here. Just love that. George Duque, good morning. Jorge, good morning. Stephen, Haggle Matters, good morning. David, Lisa, Michael, JD, Don Clement, Shy T, Vince, good to see you this morning. Travis, good morning. Rob T, good morning. Alfred, Colby, James, Dan Trader, Trading Like a Bot, J129, 92, 192. My dyslexia coming through there. Jason, good morning. Coulter, Holes, Charlie, Brody, I am Kesey, good morning. Robin, good morning. Adam, good morning. Don PR, Kim, good morning. I hope that we're not having issues with Trade of 8 again here. That would not make us happy, would it? Good morning, Fa, good morning. Let's make it simpler. Love that. A lot of new names there. James, good morning. FVB, good morning. Kim, good morning. Hoping that the Trade of 8 issues, if you're having them, are taken care of. I hope that is not the case, that it is down. That would not make any of us happy, right? All right. Well, if you are new to the market prep, welcome. We're glad you're here. We're going to be expanding this next week to Top Step TV. This segment will be called the opening call. It's going to be a little bit different. We're hoping that you're going to like it, and we're going to, again, be spending a lot more time having guests, showing live trading, showing all kinds of things, lots of segments, more people from Top Step are going to be involved. We're going to have a shoulder tap where the risk managers are going to come in and talk about some of the traders that we've seen. We're going to have Dan coming in talking about his favorite product, crude oil. We've got all kinds of things planned for you. So looking forward to it. Holes chart. I just logged into Trade of 8. Through TradingView, no issues. Scott, dang. Well, let's see if we can get through the market prep here. I'm using these Trade of 8 charts, and so far I haven't had any. Lost audio.
1 second.
I did not. How about now? We're good? Who can read lips? All right, excellent. We're back in business. All right, let's get into these charts here again, starting with the daily and the S&Ps. We've got an upside digestion market state. Price either comes up to and then pulls back from, pulls up to, pulls back from, pulls up to, and consolidates to even out inventory. So we've got the market really holding up well, I think, from yesterday. We talked about the Wednesday high and the Thursday low being the extremes of an area of digestion, upside digestion at that, and we have managed to hold those levels. Yesterday, we're right in the middle of the range from what we discussed about Wednesday's high and Thursday's low. The market seems to just be kind of hanging around looking for new information, and it's going to get new information tonight, tomorrow afternoon. There's a lot of things coming out. So it is usually my expectation that when we have this much information ahead of us, a lot of traders are just going to be working on making themselves hedged in case anything wacky happens. Smaller speculators will probably be out of the market or should be out of the market when some of these things come out. And so it's kind of a hurry up and wait kind of a scenario, right? That's what's was in our title today is that may be the call. I don't know. Nobody knows exactly what's going to happen, but it is my speculation, one of my hypotheses, that we may see some smaller ranges, some opportunity for range-bound trade. If you don't trade range-bound, just keep yourselves calm and watch. We do have some information coming out here in just a couple of minutes. We'll see if the markets respond to these housing numbers. And well, the housing numbers are out already. The consumer confidence numbers is the one that concerns me. We're seeing a little bit of maybe some thin liquidity here in the S&P. If you ask me, the NASDAQ always has thin liquidity. So we'll see what happens here at 8 o'clock. We've got about 2 minutes, so we'll keep going through here. So again, these markets are seeking new information. Here's the 30-minute chart. Here's that Thursday low. Here's that excess high on the daily on Wednesday. So again, we've been looking like we don't want any substantial participation below this Thursday low here. Well, we haven't had any yet. The market's actually been putting up higher highs and now higher lows. We saw that yesterday. There was a pretty decent upside move, another decent downside move, where the market just kind of got too expensive for the current buyers to continue to buy it. They backed off, sellers took over. We settled here at 45.8350. Volume was just okay. Here's that volume on the daily. It wasn't tremendous. It was a little bit of a loss, which doesn't surprise me on up days. What is a bit of a surprise is the fact that we did add 14,000 in new contracts and open interest. So instead of traders getting out, traders may be doing more hedging than anything else if they're going to be protecting themselves about tomorrow. Where are we? We don't have any overnight inventory. We're not going to be opening with a gap with great probability. So we're going to be opening in range and in value. That tells me, all right, the market there's not a big change in the perception of value of the S&P right now. I'm going to stay patient, let the market establish some ranges, and then work those ranges for any opportunities today. Remember, my main hypothesis is once these numbers are out, if there's no major reaction to them, I'm going to look for the market to settle into a range, awaiting information. Earnings tonight, earnings tomorrow, FOMC. There's more economic information coming out, including the PCE on Friday. So there's a lot of anticipation in these markets, which may kind of hold some of the all of the major participants and major directional activity. Here's the TPO chart. Here's yesterday, normal variation trading day, extreme, the low of the regular trading hour session, the low of the initial balance. I would call this kind of a normal variation, neutral day. A little bit of excess at the high, a little bit of excess at the low. What I'm really kind of interested in is this low here. This was a Thursday's low on Tuesday, Wednesday, Monday, Tuesday, Wednesday, Friday, Wednesday's low. Wait, Thursday, Friday. Hang on. What's today? Tuesday. So this is Monday. So Thursday's low here. A little confused. Sorry about that. But this is the low we were looking at. We really wanted the market to hold. Well, it's held. Where does it line up in the composite profile? Well, let's see here. It's 4,600 basically for 4550, 4560. The composite profile here, 4560, low volume node. So this is the area on the 30-minute chart, the daily chart. And the TPO chart, now it's lining up with a low volume node on the composite chart. This is an important level for us to hold. Low volume, low time might be an interesting spot for us there if the market gives us that opportunity at some point. So we've had our numbers come out. Just going to kind of take a quick look at them. So the house price index, well, hang on a second here. Let me reboot this. Okay, so I'm thinking 9 o'clock Eastern. It's 9 o'clock Central that these numbers are coming out. So the housing price index, a little bit of mixed information in this. And it, obviously I don't think was all that impactful to the markets. The S&P is now looking a little bit lower, but trading very close to settlement. So we're still waiting again in an hour for the consumer confidence number that's due out. All right.
Hey, Hogue, do you mind
Yes.
if I jump? Just jumping in with a quick Trade of 8 update because I see people are talking about.
Yes, please do.
Yeah. So I just heard from support that the downloadable version works. It's the web version that seems to be down.
Okay, that makes sense because this is the downloadable version. So you may, if you can, download the downloadable version and log into that. Jorge Torres says his web version is up. Maybe he's lucky. Maybe Shaw's lucky. Martin, these are partners of ours. We've been having a lot of trouble with the TS Trader or the Trade of 8 platform, and it's really got our really top tier support team, a little bit inundated, a little bit behind. So please try and remain patient. We are working on getting these issues resolved for everybody. And if you ask anybody, Top Step is always one of the best at making it right when these things happen. So stay patient with us, please. All right. So back to the NASDAQ. So the NASDAQ looked a little bit below that low here from Thursday into Friday and then reverse. So we've got a little bit of excess on the daily chart here in the NASDAQ. Volume wasn't great. It actually lost open interest. So that would indicate possibly some short covering that occurred possibly yesterday. But the fact that we didn't close below here is a good thing. I think the market has traded back down to that level in the overnight. And let's see what it looks like on the 30-minute chart. So here's that low Thursday. Here's the low Friday. We did not close below last week's low. I think that's important. It is showing signs of excess on the daily chart for a potential reversal or a move back to the upside. Settlement is here, 15,561 quarter. We are holding possibly some overnight longs here in the NASDAQ. Remember, we just had the rebalancing last week. Seems to be settling in nicely. But we do have some overnight longs here. There is, probably a greater chance of opening with some sort of gap. Highly unlikely, however. So again, the market, knowing what we've got ahead of us, I'm going to try and stay patient. Let the market establish somewhat of an early range, and then work those extremes for my opportunities. Again, it may just turn into one of those hurry up and wait days, knowing what we've got after the close and tomorrow. Here's the TPO chart. A normal day, a normal trading day in the NASDAQ. It's kind of rare, but it does happen. A normal trading day is when the range for the first hour is the range for the day. That's kind of what I'm looking to try and achieve today, is to let the market establish its early range and work those extremes for my opportunities. Let's take a look now at crude. So we had that 78.20 weekly kickoff high yesterday. It kind of brought in some new business, some volume. It also added 14,000 new contracts on this breakout to the upside. I'm going with a B for the grid for this auction process that has now found continuation to the upside because it did increase volume and because the open interest also did increase. So what did we do last night? Well, we held the 78.20 within 9 ticks of it overnight. We settled above it. We're spending time above it. If the volume and open interest continue to come into the upside, I was talking to Dan yesterday. I said this swing high, 81.40, it would certainly be a visual target for us to continue to the upside. So here's the 30-minute chart. Overnight inventory may be getting a little bit short here into the open. It is now open, but the market is in range and in value. So we get the value area low here, which is very close to our weekly kickoff high, 78.20. This is a pivotal area. This is what I call a high target area. Might be an interesting area for some kind of an execution. But again, the market did open in range and in value, might be better off to remain patient. Is there a potential repair due here? Possibly. It's not a double distribution day. It's more of a normal variation, extreme day, excess on the low, kind of a weak end of an upside auction at the high here. But we've opened between these two the high volume nodes, or even this high volume node. This one I like even better. So I think there's a good probability that the market is going to test to either down here, this high volume node, or this point of control in the upper distribution, or both. But again, it's in range and in value. Try and stay patient. Look at gold. So the short time frame downside move seems to be killing volume. That's not going to be very healthy for a continued downside auction. So price is largely remaining inside this area of previous balance. When we came up into this, I mentioned to you that this area is probably going to be a little bit sticky to get through. Well, that has proven to be true. We seeing the auction kind of suffering on the way down here. We did, however, add 7,800 in open interest yesterday. Are we getting short here? Are we looking to try and get short in the hole here? It seems. The overnight inventory largely is flat. Okay, we had some gyrations here. The market opened here last night, got long, reconciled. I don't see that there's any really kind of tangible overnight inventory that we can use here today. One thing that I do kind of look and pay attention to is we have 1, 2, 3 points of contact. If we're having trouble holding above that, the continuation to the downside is likely. I don't really want to fight this downside move, though I don't think that the auction is doing very well because in essence, it's been one time framing lower high, lower low, lower high, lower low. Well, higher low, lower low. So this market is still exhibiting trending tendencies to the downside. I'm looking at potential acceptance above this trend line or above value high from yesterday as a potential change, but I'm not looking for it. I'm not expecting it. I'm not going to go out looking for trades in this today because knowing what we've got coming at us. Here's the TPO chart, normal variation, extreme high, excess low, a kind of a weak high here, a bit of an unfinished upside auction here, which is a bit of a change. We had an unfinished downside auction here that brought price lower. The market overlapping lower in range and in value. The longer we stay here, the less likely we're going to be able to change value all that much. I'm going to go again with the idea that I'm really going to be kind of hurry up and wait. I don't want to be looking for trades today, but you are, anything can happen. I mean, that's one of the things that we do say here, ACH, anything can happen. What about the euro? Is that going to be helping us? Now, this is also another market that has been one time framing lower as the dollar has been recovering. We have downside acceleration on good volume yesterday, but we lost open interest. So how good of a job is this market actually doing going lower if it's cutting off business in open interest? Volume is pretty good. Looks like it's ready to continue today. As long as that dollar continues to leak to the upside, I don't see why this has to change. I just don't see it. This swing high here from the 22nd, this high here, this looks like a kind of an interesting area that the market is leading us to right now. How many traders are looking at these two levels right here? They're just visuals. They stick out. If traders are looking at them, they're going to bring price there, which they are. So this market is one time framing lower, and I don't want to fight it until we establish some sort of little bit longer than day time frame structure. We have weak low. We have a gap down here. We've opened with a gap. Gap rules. We didn't close the gap relatively early. We work in the direction of the gap. There's visuals down below for us to look at. Here, take a look at the TPO chart now. Okay, so a gap up here also. So starting to leave potentially some weaker upside structure. But we've got a potential acceleration range. We've accelerated again to the downside now with the new gap that we've created today that we haven't been able to close. And again, there's plenty of visuals down here for this market to target. I don't want to fight a downside move that is exhibiting this much momentum, even though it may not be showing in open interest and in volume. Yesterday is a B-shaped profile. It's long liquidation. We lost 1,600 in open interest, so that's supported. That's not new business coming in. That's old business going out. So again, some question as to the health of this downside auction that we've got here. And let's take a look at the 10-year. We've seen the rates kind of creeping back up as we get closer to the FOMC meeting. The downside trend here, I'm giving it a C-. It's been cutting off volume. We only added 400 in open interest yesterday. So this is, again, a kind of a questionable short time frame auction process that is moving lower but not performing well. Again, but I don't want to fight. I don't want to fight this move without some sort of structure. Weekly kickoff low could be in play here within the next day or so. Take a look at the 30. Overnight inventory short. Overnight inventory getting what they're looking for. They're seeing business continuing to push price lower. So all of our overnight shorts are currently getting paid. Currently getting paid. If we can't close the gap relatively early, and again, there's lots of targets down below, lots of visual targets. Visual markets are extremely visual. Here's our targets to the lower area here. And again, weekly kickoff low is 111.07, which puts us right down to this naked point of control, which is relatively prominent. It's going to be more magnetic the wider the TPOs are, the wider the profile is that created these naked points of control. There's also an unfinished gap here with an NPOC right through the middle of it. So that is what we're kind of looking at here. Excuse me. We have a lot coming out, a lot coming at us. We're going to, of course, be trading what we see today. Yesterday, didn't see a lot. Wasn't a very active trading day for me. Probably about the same today because, again, I'm thinking that the markets are going to offer us the opportunity to kind of become range bound and anticipatory of new information. That's what it's going to take to move these markets, is new information. We certainly could have plenty of that for the rest of the week. So, yeah, I'm sorry if we're having issues with Trade Evade again. It is tiresome. I get it. But please try and remain patient.
I can jump back in for just one more
Jack,
second.
yes, please do.
Okay, so yeah, it's super frustrating with the Trade Evade stuff. Any support delays, they should be getting back to normal soon. Basically, with the new program, pretty much, we had a big influx of brand new traders. And this is not to minimize, we should have done this better, but new traders have a lot more questions and tend to have a lot more issues setting things up. And so we've gotten swamped, but we've been hiring more people. Everybody at the firm, regardless of who they are, has been pitching in and answering support tickets. We're giving out emails when we can, like I saw JD did in there. So we want to help you. If you have an issue, bear with us. And email, I think, is your best option. And always feel free to reach out. We give out our emails, and we'll try and make this the best. So that's it. Back to your thing, Hogue.
Okay, thank you, Jack. And Jack is right. I mean, we have the best support in the world. They're just a little bit really busy, and we have, again, it's frustrating. We get that. We're getting through all of this as quickly as we can, and we're hoping that these issues will be ending very, very soon, of course. And focusing on trading, let's take our deep breath. Stay humble, grateful, creative, and centered in your trading today. And we look forward to seeing you again tomorrow morning on the Market Prep, soon to be the opening call. We'll see you then. Trade well.